Michigan auto insurance premiums are notoriously high. When the bill comes, trimming to the absolute state minimum looks like an easy way to save cash. You buy the basic policy, print the card, toss it in your glove box, and drive away. You're legally compliant, which usually makes you feel secure. But that piece of paper is hiding a massive gap. It keeps you right with the state law, but it leaves your personal bank account entirely exposed. To see exactly how wide that gap is, we are going to follow a single severe crash through a chronological timeline. We'll track the true out-of-pocket costs for a driver carrying only minimum coverage, starting from zero. Keeping your car street legal and keeping your family financially solvent are two entirely different objectives. Confusing the two is a very expensive trap. It starts on a regular Tuesday on a local route like M44. An animal jumps out, or a distracted driver misses a red light. You hit the brakes, but your car is instantly totaled. Michigan's minimum laws require property protection insurance to cover damage you cause to other people's property, like a fence or a parked car. The law requires absolutely nothing to repair your own. Unless you actively chose to add optional comprehensive or collision coverage, you get nothing from your insurer. The entire market value of your vehicle is wiped out. If you were driving a car worth $25,000, you are now absorbing that loss directly. Our out-of-pocket tally takes its first major hit. The first hidden cost of carrying state minimums forces you to absorb the total destruction of your vehicle without a dollar of help. Now the timeline moves forward. The ambulance arrives and you're taken to the hospital for severe injuries. Personal Injury Protection, or PIP, pays your medical bills. Michigan allows drivers to select lower limits, like $50,000, to reduce their monthly premium. This graphic tracks your PIP limit. In a catastrophic scenario with surgeries and hospital stays, costs can easily exceed $50,000. Once it overflows, the remaining bills become your personal debt. Then the situation compounds. The driver who caused the crash is uninsured, a scenario that is statistically common on Michigan roads. Because you opted for state minimums, you declined optional uninsured motorist coverage. That is the specific protection designed to cover your lost wages and physical suffering when an uninsured driver hits you. The entire gap falls directly on you. Choosing the cheapest PIP level to save $20 a month on a premium can directly trigger hundreds of thousands of dollars in unavoidable, unshielded medical debt. Now, let's flip the timeline in the perspective. What happens if you swerve on a wet road and you are the one who causes a severe multi-vehicle accident? Michigan requires bodily injury liability coverage to pay for the harm you cause to others. But the minimum requirement is just $50,000 per person and $100,000 total per accident. This chart illustrates the problem. If the victim's combined medical bills and lost wages reach $400,000, you have a massive deficit. Next to it is your tiny $100,000 minimum policy limit. Your insurance company writes a check for their maximum limit. Once they pay that amount, they have fulfilled their legal obligation and they walk away from the claim. You are now personally sued for the remaining $300,000 difference. Courts will extract that money through aggressive financial mechanisms. They will issue wage garnishments on your paychecks, drain your savings accounts, and place liens on your family home. In a worst-case liability scenario, a minimum insurance policy acts less like a protective shield and more like a small down payment on personal bankruptcy. Look at the staggering final tally of this timeline. A lost car, overwhelming medical debt, and a devastating $300,000 lawsuit judgment against you. State minimums are a rational choice only for drivers with very old, low-value vehicles, or those facing extreme financial hardship, where the alternative is driving illegally uninsured. But for the vast majority of drivers, families, homeowners, and people with savings, you must stop buying insurance as a legal checklist and start buying it as wealth protection. First, increase bodily injury limits to $100,000 per person and $300,000 per accident to protect assets. Next, add uninsured motorist coverage and match your PIP level to your health insurance. Finally, cap exposure by adding a personal umbrella policy. When you bundle these coverages and review them with a local agent, layering these massive protections costs significantly less than most drivers assume. True coverage is the deliberate act of ensuring one terrible second on the road doesn't erase a lifetime of your financial progress.